Alright guys, welcome back to another video. In this video, we'll be going over daily bias and all the things you need for a daily bias. And as we know, the daily bias is probably the most important thing as an ICT trader. It helps us align ourselves with the trend and understand where the market is actually going. This allows us to identify higher time frame drawn liquidities, which also helps us to signify trades and understand where the market is going. And I know a lot of you guys have been struggling with the daily bias, but don't worry, in this video, we'll go over these 3 steps that'll help you really understand how to calculate the daily bias and know where the market is going every single time. So the first step is going to be ERL to IRL. What is ERL to IRL concepts? All external range of liquidities are just swing highs and swing lows. And what are internal ranges of liquidity? Just pretty much fair value gaps that rest between those swing highs and those swing lows. So this would be an ERL, this would be an ERL, this would be an ERL, this would be an inefficiency that we tap into, and then we would target this ERL. So the ERL to IRL concepts are just a way to filter out and understand where the market is going in a staircase pattern. So how would we actually apply this on the chart? So we can take this as an example right here. This is the daily candle. The next daily candle opens up. So what do? You can clearly see this was the ERL right here, right, that we swept out. This is the daily external range of liquidity that gets taken out. So what would you expect? You'd expect price to have some sort of retracement, possibly down into here or here. So the daily bias, no matter what, is going to be short. And as you can clearly see, it probably will be a tap into this gap. And as you can clearly see, that's what happens, right? And this on the lower time frame is just some sort of lower time frame reversal. But what do we actually do? We just come back into the internal range of liquidity. And what's the next step? After tapping into the internal range of liquidity, what's going to be the drawn liquidity after that? It's going to be ERL, right? The daily ERL right over here. And as you can clearly see, right off that ERL, we tap into it again. And then the next day, we sweep out this ERL. So that's one simple way. I'm always keeping in mind where the daily bias is actually going to go. And I also use this on the higher time frames, like the weekly chart, as well as the 4-hour chart and the hourly chart as well. But I like to use it on the daily bias. And as you can clearly see on the weekly time frame, we clearly sweep out this weekly ERL, this monthly ERL, and also this internal weekly ERL, and we form this fair value gap right here. What is my drawn liquidity for these candles? I kept saying this throughout the weeks. I wanted this to tap into here. Unfortunately, we actually made SMT with this asset, right? But ES actually does tap into its weekly fair value gap, which you can clearly see. ES tapped into its weekly fair value gap, forming some SMT after sweeping this weekly ERL. So this did actually play out, and we got that bullish reaction targeting this high right here. So focusing on ERL to IRL concepts are very, very important. And the next thing I like to use for my daily buys are strong candle body closures. Now this one is very, very simple. All you want to see is a candle body closure below the last previous day high. Let's say this is the candle we like to use. We get a green candle right here. As you can clearly see, we close above the previous day high. And so what would we expect? If price opens up right here, we can expect that that previous day high is going to get taken out. So if this candle opens up right here, what is the drawn liquidity no matter what? I'd expect this previous day high to get actually taken out. So we can take another look at an example right here where we get a candle body closure, say below here. So we get a candle body closure below the previous day low. Now what would I expect? If the candle opens up here, I'm expecting this to be taken out, and then we could possibly reverse or do whatever. So that's a very, very simple concept that helps with the confluence, pairing that with ERL and IRL, the candle body closure on the daily chart. Now, one thing I feel like people really tend to miss during the daily biases is really understanding where the market is in a higher time frame drawn liquidity. Now, we can look at this in a couple different ways. Now, in April, I signaled out saying you should have bought this dip. Why? We had a power of 3 playing out literally perfect, right? This accumulation, this manipulation, and this distribution. Now, what is this on the higher time frame? If we go to the yearly time frame, you can clearly see this is just tapping into this order block and we reject off it. So for the rest of the year, I'm expecting bullish price action unless something fundamental actually happens, right? Where it's out of our control. But on the higher time frames, understanding this is the low of the year, right? The narrative is mostly going to be bullish. That's one way to look at it, where we have this accumulation, this manipulation, and this distribution higher. Another way to look at it is a market maker model. Now you compare both of these. Well, let's say this is your original consolidation. This is your first leg of expansion. This is your second stage of accumulation. This is, your last expansion, taking out these liquidities right here. And this is your reversal point with SMT. And then this is your first expansion, your second accumulation, your second expansion. And what would we expect here? We'd expect accumulation because of this large expansion. So ideally, I'd want price to tap further back into the range, right? Tap into here, into the discount of this leg higher, and then possibly continue higher towards the true drawn liquidity. And what actually happens on the weekly time frame and the daily time frame, we tap into this fair value gap, see a strong candle body closure here, and the drawn liquidity after this then becomes what? All we're going to be looking for is bullish price action, because this is a confirmation low, right? We have a strong candle body closure out of the discount PD array of this range. So I would have just expected higher price action, and these are actually your drawn liquidities. Now during this time, this is just an accumulation slash a slow expansion higher, but we will see violent candles when the time is right. And another thing is, you have to look to the left, especially when you're not at all-time highs. You can clearly see that there was this daily fair value gap that was unmitigated. We tap into it and we see a candle body closure off that. Now, if you see this candle on Wednesday, you should expect that, Thursday might be an accumulation and Friday might be a short-term retracement, just because of how we reacted and closed on the daily chart off this gap. It's going to be the same way on the 4-hour chart and the 1-hour chart as it is on the daily chart, right? If you see a strong candle body closure off a higher time frame PD array, you should expect, some sort of accumulation or retracement or reversal if the reversal conditions are actually met. Now, another thing for the daily bias is institutional order flow. Are we respecting bearish PD arrays, or are we disrespecting bearish PD arrays and respecting bullish PD arrays? Now, I've just been looking at this on the daily time frame, but how I mostly get my drawn liquidity or my pre-market analysis is looking on the 4-hour time frame or the 1-hour time frame. And how I do that is looking at ERL and IRL concepts paired with the institutional order flow concept with the candle body closures. So on the 4-hour chart, I'm always looking for those things to solidify my daily bias. On the 4-hour chart and the hourly chart is actually how I find my pre-market analysis. So we can clearly see a quick example right here. What would I be looking for? I can actually make this with ES so I can understand where we're actually at. And I like to use SMTs as well, previous day high SMTs, strong 4-hour SMTs, to really give you that daily bias as well. But what would I expect on NASDAQ and ES? We can clearly see that we're respecting this bearish PD array, this 4-hour fair value gap. We're respecting it. And what are we doing? We're disrespecting this 4-hour fair value gap, and off this candle body closure and this reaction out of this 4-hour fair value gap, I'd expect price to respect this bearish order block. And as you can clearly see, this order block is being respected by these candle body closures, as we're not closing near the CE or even inside of that order block. So what would I expect price to do? I'm expecting price to tap into this ERL, right? Or this ERL, or this internal range of liquidity, sorry, and target these liquidities right here. And as well as this daily equal low, this is a strong drawn liquidity. You can clearly see we don't want to push up higher yet. We need to take out these daily equal lows and tap into that weekly fair value gap that I mentioned before on ES. So we can clearly see that we just dump lower, and during this day on Wednesday, we would have a bearish bias. So as an example in this video, I'll do the rest of this week's price action. So we start here on Friday actually. So I'll start from Tuesday and do the rest. So what do I see here? So first off, I'm going to the weekly time frame and seeing what we do. So as you can clearly see, this candle closes right here, we have a strong candle body closure and a change in the state of delivery on the weekly chart. So I'm gonna mark this out as a weekly change in the state of delivery. Now this is a strong candle body closure, right? So I'd expect price to continue pushing lower towards, some sort of drawn liquidities here. So what am I looking for? I can clearly see, we have this candle body closure. Ideally, I'd want price to tap into this change in the state of delivery level, then continue lower, right? So first things first, Monday, right? I'd want price to push higher into this gap or this change in the state of delivery. And this is actually valid as well as we see out this daily external range of liquidity. So my daily bias for this day is clearly just going to be tapping in this daily internal range of liquidity, right? Or this change in the state of delivery, then continuing lower. So we can actually look for some entries here as well. Go down to the hourly time frame, see if we get some closures here. So let's just fast forward. So we actually open up here. A little spoiler, but we open up inside of this daily fair value gap. I'd want to see a strong candle body closure, right? This is your strong candle body closure. You sweep out, this liquidity. Get that strong candle body closure here. You tap into this ERL, right? This internal range of liquidity. We probably have some sort of SMT, and then we get that dump. And why does this make sense? It makes sense as well, right? We tap into this internal range of liquidity. And what is the drawn liquidity going to be then afterwards? It's just going to be previous to low because that's the ERL. So based off this, we also have these equal lows over here that we leave a failure swing to. This liquidity here. So honestly, based off this crazy reaction, we tap into that internal. We have a nice strong candle body closure here, forming a propulsion block. I just want price to dump here. This is just very simple, right? Based off the candle body closure. If we are following that open, high, low, close, we'll open, high, low, and then close. That's what I'm looking for. We can skip the day. See how it plays out. And that's exactly what happens, right? We can go down to the lower time frame to see. We open up, right? We open up, create the low, tap into here. So it's the opposing side, right? Accumulation, manipulation, distribution. But I do think price is just going to continue lower. Now, what does this mean? We probably come tap into them. Yep. We probably come in here, tap into some internal range of liquidity, right? After sweeping this external, we tap it as internal. Strong candle body closure back into the range. So what is my drawn liquidity next? My drawn liquidity is simply just this right here. So we can mark this out. This is going to be our drawn liquidity, which is going to be previous to low. Now that makes sense to me because we reacted off this PD array and didn't show any, strong candle body closure back into the range. So the next day, we don't actually tap into that area all the way, but we do come down below, right? And it seems like we're just going to be accumulating here, possibly, going back into this internal range of liquidity, or we might just react off of here. It just really depends. So and this is a Wednesday, so this might just be a nice little accumulation. Now we're still inside of that 4-hour fair value gap, but let's see how price just reacts off this gap. I do think prices wants to push lower. Yep, and we get that strong candle body closure at 2 a.m. and reacting off that internal range of liquidity and not inversing this gap, right? Still respecting it with the institutional order flow. These would be the drawn liquidities. And I do think we probably sweep it out. Yep, we probably sweep it out. And you can clearly see what happens here, right? We can go down to the lower time frame and see how this actually plays out. This candle opens up. Let's see. So what do we do here? After sweeping this out, we tap into the internal range of liquidity. And after tapping into the internal, we tap into the external. Now, based off this candle body closure, there's no need to push back into up here because the internal has already been tapped into. So I'd expect price to just continue pushing lower into, maybe this gap, this unmitigated gap, maybe some drawn liquidity. And we swept out that daily external just now as well, right? So ideally, based off this candle body closure, off this accumulation, we should see another day of distribution. And that would actually cap off the week. And we can see how that plays out. Do we come back into the range? Or yeah, so we pretty much sweep out this liquidity out here, and we probably close back into the range, which is absolutely beautiful, right? But what are we going to be trading? We're going to be trading that distribution lower, because that's what the draw on liquidity, and that's what our daily bias aligns with. So at 9:45, I actually remember this day, trading this day. What I did is there was an SMT with ES here, a strong candle body closure back into the range. I took this inversion fair value gap with that SMT and that daily bias aligning, right? I took this trade, the exact trade, and I took it down for 2R pinpoint. And this was my exact trade on this day that aligned with my daily bias. And I think there was a 4-hour fair value gap that ES tapped into. And we also have this small gap over here, right, that we failed to close above. So the drawn liquidity then became these lows here. So that was actually a trade I took, and it aligned perfectly with the daily bias. So follow those 3 steps, and I do believe you will master daily bias. Look at the daily chart, look at the 4-hour chart, and look at the hourly chart. I always start off with marking out SMTs, right, at previous day high. I mark out, the ERL to IRL, and then I go down to the 4-hour chart and do the exact same process. Are we respecting bearish beta rates? Are we disrespecting them? Are we tapping into a higher time for fair value gap? What are we doing? Do we sweep an ERL? Do we, after sweeping an ERL, do we see a strong candle body closure that to indicate that we might go into the IRL? These are the questions I ask, and I do this until the hourly time frame, right? And of course, you have to mark out the SMTs. If there is an SMT, that is the most important thing as well. So I hope you guys learned from this daily bias video, and you can apply this for yourselves.